Yo, welcome back, welcome back. This is the voice of Trade with World Bank. I want to greet everyone once again. This is night though, but I just want to greet everyone once again. Happy New Year, Happy New Year, Happy New Year. More peeps to our accounts, more money to our accounts, more blessings to us, and more good things to come before us in this 2022. Yeah, I'm gonna say once again also, welcome to my YouTube channel. It's been a while I uploaded a video. It's been a while I uploaded a video to my YouTube channel, but this year expect expect more videos and valuable content from me. At least maybe our weekly classes will hold again, and then we're gonna start something from there. Okay, but today in today's video, what do I want to talk about? I'm not talking about analysis. I'm not doing anything analysis. I just want to advise us uh ahead of 2021. They always say, he that has ear, let him hear to what the Spirit has to say to the church. Though I'm not the Spirit, and I'm not trying to be talking in the form of a pastor, but I just want to tell you guys that okay, at least you should try to listen sometimes, once in a while, and then you can achieve consistency. Or in your process of gaining consistency, try to listen to others that that have passed through whatever you're passing through. So that's why I'm just using that quote. Okay, so in today's video, I'm going to be talking about, yes, my traders, those that are into FTMO, either in the free group or in the mentorship group, because most these days most people have been messaging me that, hey, I bought an FTMO account, I bought my Forex fund account, I just funded my FTMO. Most of the chat I'm getting these days is just FTMO, 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 and some of them are like, oh, I've lost money on FTMO, I'm buying again, I've done this, I've done that. So my little advice for you is what I want to just drop in today's video, and I'll also be showing you the live statistics of my Forex funds. You understand what I'm saying? So I'm showing you live statistics of my Forex fund, and I'll be telling you some things you can do as a trader to achieve consistency. Though I'm not against these funds, these firms, because there was a time I posted on the Telegram group that these firms can be scam. That was when this scandal was ongoing. Is it not? Funding talent, yes, I think that one just came and then started. Everybody knows the story, so I was a bit against them, but at least from the consistency and what we can see that. I hope this is recording. Yes, we can see that FTMO is really nice, and then my Forex one too is really, really nice, but I'm not into any challenge. I'm not into any challenge account. I'm not into any FTMO. I trade my money by myself, and then whatever money I make is for me, myself, and I. The broker I use is recommended by me. You can use it. I'm an affiliate with them, so if you have any issues, you can just refer to me. The link is in my YouTube video, in this video description, so you can always check it out. But for those that are into FTMO, that's what I'm going to be talking about today, and then subsequent videos I'll be releasing, we'll be talking about analysis and so on and so forth. Okay, now, like I said earlier, I'm not here for chatting or to check the charts. I'm not here for that. I just want to advise us, talk to us as traders, to open our heads, so we won't lose money, we won't blow our account in this FTMO challenge or whatever. Now, in my mentorship group, there's also a challenge I always do, which actually makes my mentorship interesting. When you want mentorship to be interesting, and then you want people to participate, you have to do some things, even if just to encourage people. Yeah, I use the word encourage. Before FTMO started, let me just really tell you a quick story. Before FTMO started funding talent and so on and so forth, I always fund my students, sometimes maybe $200. I mean, those that are trading demo and don't have money, but I can see that they are consistent and they always send results to the group. But if they are demo traders and they don't have money, then I always fund them. Yes, I always fund them. I've been doing this for the past 1 year. So this is not the first time I'm doing it. Even you can see 1 year, and then last year I don't think FTMO was around last year. So I've been doing this, but and then those who make profits, then we're going to just share the profits 60-40. Yes, we always share the profit 60-40. I mean, the person who's trading the account takes 60, and then I'll take the 40% because I'm the owner of the account, and then I'm the risk manager here, because if the person loses the funds, the losses are going to be on me. So we do that, and then some rules are also set, but the rules are not so strict. Just a little bit of leverage, and then you stick to your analysis. That's just all. and well, it's still on. It's still on. The challenge is still on, but it's for those that are in my mentorship. The person who is in charge right now uh is has not started trading because market has just finally opened, and this is market has not opened. We are still in January 1, so I'll be sending the account details by January 11 when market officially opens after NFP. Then the person will start trading. If he makes profits and if he makes loss, then they are fine on me. Okay, it's going to trade it for 1 month, then we shuffle it like that, then another person takes over, another person takes over. Yes, the winner of the last um of the last challenge was Dominion. Shout outs to Dominion. If you're watching this video, shout outs to you. You really did a great job. We did share of profits, whatever. So in today's video, I'm going to be talking about FTMO. First of all, what you should know about this funding firm. Okay, this is what do we call them? Prop firms. Yeah, what you should know about this prop firm is that once you buy an account on a prop firm, you should know that that money can set you for life. Like that money can set you up for life. What I'm talking about is okay, someone has given you $10,000 cash. Let's say you bought the account of $10,000. I think that's the smallest, or 100K. Imagine on buying account of 100K, and then it's just like person gives you cash and says, I've given you this cash, then use it to invest. Wow, that's like a very good startup for you. Like you already have the funds, then you don't have to worry about money again in your life. You already have the cash, you already have the capital. Yes, you already have the capital, and then that's why I said these prop firms can set you up for life, because once you know what you are doing and then you are trading it the right way, you are following your trading plans, you are following your trading rules, then the withdrawal should what set you for life. Then your profit is going to be for you. You know that. And I don't know however they are doing their profit split, or maybe 70%, maybe 80%. I don't know about that. So before we proceed, I'm gonna show you the statistics of MFF, which is my forex fund. Okay, so this is the video I'm working. These are the videos I'm working on for my students. We have these videos here for entries. This is the first video, structure, then supply and demand study session, then WYCKOFF, other block entries. Yes, this is talking about entries, double demand and supply entries, market maker can do entries, and multi-market entries. All this sort of knowledge, you can easily find them on YouTube. So for those asking for my mentorship, join the Telegram group. It's going to be in the description. Then you're going to see a pin message. It's just $100 lifetime mentorship service where you can join and get all this knowledge and information. There's still a lot of videos for them in the mentorship. You can see extra webinar, introduction to mentorship videos. So we have 13 videos here and 5 videos here. Then this one we have 8 videos here, and one more video still coming up, which is the confirmation special entry. That's the last video I'm owing my student right now. Then I'll drop it for them. Confirmation special entry. I've not given them all these videos because I still want to edit some things, and then after I make the confirmation special entry video, then I'll drop it for them. Okay, so this is my forex fund here. This is my forex fund here. Let's just check October and November uh statistics. Okay, they said our live account was just 3,400. Total amount paid is what, 1 million US dollars. Very nice. So this is just to show that these guys are consistent and they are actually paying out. Okay, most traded pair is what is gold, most profitable pair is GBP. Okay, then they said the most traded is what, gold, but the most profitable is what, GBP AUD. Means those people that are trading gold are not really profitable trading gold. It is GBP AUD that is what, that is profitable. Least profitable per GJ. It means a lot of people lost on this pair, I guess. I'm just guessing though, but that should be it. Least profitable. Then past phase one. Okay, past those that passed phase one, just 18%. You can see 18% of these live accounts passed phase one, and then phase two, 31% of traders who passed phase one. It means 31% of these 18% are the people that passed phase two. You can see, and then those that reached the first profit split is what, 4% of traders who passed phase two. Then you can see that this thing is really decreasing, declining. When it's got to the first profit split, it is just 4% out of this 31% who passed this phase two. You can see, you can imagine, 31% of 18% passed phase one, and then 4% out of this 31% reached the first profit split, which is very bad. So it means maybe most traders are not consistent. They are not, they are just trading or gambling. And then there was a time they said most traders don't use stop loss. Where did they draw? I think it was on their Instagram. They said that most of their traders don't use stop loss. So I'll start from there first of all. As when you are trading this type of things, you must take it as your personal money. I don't know if they are giving you guys demo or live accounts, but what I can see new live accounts. So I guess they are giving you guys live accounts. I don't really know about it, but if they are giving you this type of account and it is, let's say, $10,000 or 100K account, it means you should be treating it like your personal money. You should be treating like your personal money. It's not entering the market and trading without a stop loss. That's very, very dangerous. If you are trading without a stop loss, you all know the implication. You all know the implication of trading without a stop loss. Trading without a stop loss is very, very dangerous because when the market goes against you, it goes against you fully. And then when the market wants to, maybe a news is coming and you don't know a news is coming and you're not using stop loss, imagine the loss that you gain on the spread and then the loss that the market will go against you in against your direction. Something like that. So it's not very, very beautiful. It's not very, very nice to trade using without using stop loss. Always use stop loss when you are trading. While you are trading, you need um a trading plan also. Okay, you are what, a smart money trader, and you know that, okay, uh this is GBP JPY and I know that I need to trade just other blocks. It's not because, don't say because sometimes when market does not give you setup, it's not left to you to now say, okay, this is another block here, let me, because this is what most people do to blow accounts now, because the market has not gotten to your other block zone, or because market is getting too late, or because all your pairs have not given you a setup, and then you can see something beautiful like this and you say, okay, this is another block and I know market will mitigate it at this point. Then you now take a sell at this point and then you say, okay, I'll take a sell, then market will mitigate the other block, then I'll close the sell and market will start going up. But you can see what happened here. Different sort of things that you just make place without, that's what you are trading without a plan. At this point, you are not trading, and there's no valid reason to enter a trade at this point. The only valid reason to enter a trade is what, at another block zone or at another block zone here, which played out perfectly. So because the market is not giving you setups yet, doesn't mean you should just enter. Okay, because market is moving up, down, up, down, up, down, and you can see, okay, market is on an uptrend. You now go and buy at this point. When you are buying at this point, you can see market is coming down. So you need to have a trading plan. You need to have a why. Okay, why did I enter this trade? I entered this trade because there's another block here and there was a confirmation on the 3 minute time frame using what, the double demand and supply zone. So this is a special entry that I shouldn't be showing you here on this free video, but at least you should have a reason for entering the trades, not, okay, entering the other blocks and then just doing all sort of things before the market gets to your zone. You are trading without a plan. At that pace, you can't achieve consistency. I've uploaded a video on my YouTube before, how to, is it not achieving consistency, or was it? Let me quickly go to my YouTube contacts. Let's quickly check it together. How to grow a forex account. This should be it. How to grow a forex account consistently. Like, I explained everything there. Once when it's relates to consistency, you shouldn't trade without a plan. You shouldn't trade without a plan. You should have a reason. There should be a why for entering a trade. Okay, and you shouldn't trade without a stop loss. Using a market like this, let me delete my analysis here because some people are very smart and they'll get my entry. Okay, but the entry is just for those in my mentorship group. Okay, now you have a trade plan that, okay, you want to take a buy here. That's just a random stuff, and what your stop loss is going to be, what, let's say 5 pips or 10 pips. Then you should stick to either 5 pips or 10 pips stop loss, not trading without a plan. Then you say, oh, because market is doing like this, I think this type of setups actually work, and then you just enter market anyhow, and then once it goes against you, you start crying that, hey, uh this thing is going against me, blah blah blah. And you should also trade your favorite pairs. Is not entering the market and just selecting any type of pairs to trade. Some people are fond of that thing. They'll just enter the market and then do any sort of things with the pair currency pairs. They say, okay, I'll enter Euro USD today, tomorrow I'll enter USD card, next tomorrow I'll enter, that you are not focused like that. You're just doing different things at different time. But me, I love all these pairs that I trade here because they really follow my analysis and obey my analysis. If you try to check them, Euro card, Euro CHF, I really have beautiful setups on them, and they are doing they are obeying me very, very nicely. They follow my analysis very, very nicely. So I don't see any reason to. You can see they follow my analysis very, very beautifully and nicely. Once you are used to it, then there's no problem about them at all, at all, at all. But as a different trader now, you are saying, okay, today you are trading Euro USD, tomorrow you are trading USD card. At that point, I might say you are not different from a gambler, because You are not consistent. There's no consistency in whatever you are doing, because all these currency pairs, there's nothing bad in just selecting a currency pair and then trading it. And then when you are trading a currency pair, don't over trade. There's something we call over trading. You should have a particular amount of percentage you should be trading every day. Okay, let's say you hit your stop loss today. You should, okay, if my stop loss hits two times today, I'm not taking a trade. That's very beautiful. Not over trading. Okay, yeah, your traders it stop loss at the first time, it stop loss at the second time, and then you still want to keep trading again, keep trading, keep trading. No, it shouldn't be like that. You should have what you should um you should control yourself when it comes to losses and emotion, because when you have losses, it's not always nice. Yeah, let me tell you something. Yeah, I'm coming to the area of losses now. When you have losses, it's not very very nice, because you are down. You are down. You don't know what to do. Be like, should I enter a trade? Should I not enter a trade? It will be affecting the next trade you are going to take. But I want you to understand something. This is why trade plan is very important, and journaling your trades. Now, my strategy. I can say this strategy I'm using, which is the other blocks, which is the other block strategy. I can say 80% accurate with the strategy. Now, 80% accuracy means what? I don't have accuracy of 20%, right? Now, if I don't have accuracy of 20%, what does that mean? It means if I take 1,000 trades, it's possible to lose what? 200 trades and win 800 trades. Am I correct? But now, I'm on the losing streak of what? 200 trades, but my accuracy is what? 80%. It means I can lose. It is normal for me to lose 200 trades in a row and then make 800 trades back in a row, right? But any trader that is making 200 trades in a row will be like, wow, this system is not working for me, this and this, blah blah blah, stuff like that. But you've forgotten the fact that your trade or your analysis is actually 80% accurate, and then the next 80 trade you should take should be what? Accurate. But because of the losses, you've forgotten the fact that your strategy is accurate. You've forgotten about the accuracy of your strategy. This is what kills the psychology of traders, which is very very important, and then it allows people to start changing strategy. Be like, oh no. But even if a strategy is 90% accurate, no strategy is 100%, remember. So I'm using the 90% rule now. No strategy is 90% accurate. And then if no strategy is 90% accurate, it means if you are taking 1,000 trades, it means you have to lose 100 trades and gain 900 trades. So if you are losing 100 trades in a row, it means it is normal. You understand what I'm saying? But this is the fact that most people don't want to accept as traders. And this is why I also tell my students that losses is what? Losses is nothing in this game. As long as you know whatever you are doing, and as long as you are sure of your strategy, as long as you have known your edge in this market, as long as you've known what works for you well, then you should know that the losses are what? Very, very minimal. Okay. Uh 10 trades in a row, and then is 80% right. 10 trades in a row, it means you lose two and then gain eight. So that's very, very fine. Losing two to gain eight. Very, very beautiful. And so let's move to strategy now. Yes. Okay. Literally, let me just tell you something about this market. There's no strategy that doesn't work on this market. Let's go down to the 30-minute time frame. I want to show you guys something. Literally, there's no strategy that doesn't work on this market. Either smart money, trend line trading, Fibonacci, uh, which other strategies do we have? Wyckoff, Elliott waves. There's no strategy that doesn't work on these charts. Now, let's use trend line strategy, trend line breakout entry. Now, you're going to see what I'm talking about. Now, let's say I'm a trend line trader. Now, I stopped trading retail. Why? Because of the stop loss. I hit wide stop loss. And that way, I didn't really gain consistency, because I'll just, if my stop loss is 20 pips and then the market moves 50 pips, and then I might take its losses in a row, and then my next trade won't meet up the its losses in a row. But with smart money, if you even have 10 losses in a row, two trades can also recover them back. So now let me just try to show you that there's no strategy that doesn't work on these markets. Now let's use the trend line breakout strategy. Okay, this is a trend line breakout here. Breakouts, you'd have gotten a trade, right? Let's keep going. I'm looking for buy opportunities only. So let's keep going. Let's say there's a breakout here, fake breakouts. You'd have taken a loss here. Breakouts, you'd have gotten a profit there. I'm just looking for buyers. I don't want to look for sales, not so I won't get confused. Let's say we want to use this one. You can see now this is breakout. You'll have gotten nice profits there. we just drawing lines. Now you can see breakouts, profits. So I see no reason why you guys should still trade strategy when you're having losses on your strategy. It's just left for you to what, to stick to the strategy. These breakouts, profits. I'm just looking for losses actually. Okay, breakouts, then little profits, maybe loss again. Breakouts, profits to the upside. You still be taking out these profits. Okay. There's a sell there, but I don't want to look for sales. Now I just want to keep using trend lines till you get to the current market price. You can see breakouts, little profit, and then it might hit your stop loss if you didn't break even. And then you can see how this is working perfectly fine. Breakout. Now with this strategy, it might be like 80% win rate. So the 20%, which is not the win rate, now when you are losing 20%, just know that it is part of the strategy. Breakouts. It's just your psychology behind everything that matters. I don't use all those zones. Okay, you can see breakouts. So at all these points, you won't have anything to trade. At all these points, you don't have anything to trade. Let's say, okay, beautiful breakouts, move to the upside. I'm only talking for buys. I'm not looking for sales. So at all these points, you have to be waiting. At all these points, you have to still be waiting. Breakouts, profits. I'm just trying to tell you that literally there's no strategy that doesn't work on this market. It's just up to you to find your edge and know the real ones that work for you. You to spot what you see, what to see before trading breakouts, before making entries. Now at this point you have to what, keep waiting, and breakouts. So I see no reason why people should still change strategies whenever their trades are in losses. Breakouts, beautiful breakouts. So after this point, we'll be waiting. Breakouts. Now with this strategy, let's just say it is 70% accurate, because I'm even looking for a lot right now. Okay, let's use this. I'm looking for a trade that will end up in loss. Yeah, something like this now. Okay, now this is beautiful. Now, when you have a loss here, let's say you've been having 3 losses now from the back. This is the third loss. Now, because this is the third loss, does not mean the strategy is not working. It just means it is time for the strategy to fail, right? It's time for the strategy to fail, because remember, the strategy might be 70% accurate, and then that 30% inefficiency or lack of accuracy is what is playing out at this point. And then at this point, when you understand your strategy is 70-30, then you should have no reason to get frustrated when you are having losses. That's what I'm trying to point out. Like, you should have no reason to get frustrated when you are having losses, and there's no reason for you to change strategy when you are having losses, and uh there's no reason to overtrade when you are having losses, because you should already know that, okay, once you see that beautiful setups like this, you want to milk the market. Then when you're having losses, there's no reason to start looking for strategy up and down, or to start to change strategy. You can see breakout, and then strategy is working again until maybe to fail. Let's see. Okay, let's use this. Okay, there's even still profitability there. Okay, there's still profitability here also. So you are just a trend line trader, and you can see literally there's no strategy that doesn't work on this chart. So it's left for you to know how your strategy works, to find your edge, and then to know how exactly it works for you. Entry and exit, liquidity points. I'm talking about smart money strategy now. Liquidity points, and then when to leave the market or take profits, or when not to take trades. For me now, I was explaining this in my previous video. I made that I don't take this type of other blocks. Why? Because it has already broken out of my zone, even though it went back and even went into profit. But I looked for entry for those that will be taking this type of trades. But for me, I don't take this type of other block because it has already gone out of my zone, and then I've forgotten about this trade. I'm moving on to the next pair. As simple as that. I've already known what works for me and what doesn't work for me. Understand what I'm saying? So the type of other blocks may I trade are the ones that happen exactly on the zone. I was analyzing this on a video I made yesterday or 3 days ago. Yes, the market was still here at that point, and then I drew out this one and see how it's played out perfectly fine. Now you can see this is the type of trade I want to see, not the one that has gone down. That's that's my edge for me. Okay, I know that. Okay, I don't trade other blocks that has gone below the zone because it doesn't really work for me. But if it works for you, fine. That's why signals will never take you anywhere in these markets. Signals will never take you anywhere because the person sending signal already is trading based on his own edge in this market, and then you can't trade based on another person's edge. You understand what I'm saying? You can't trade based on another person's edge. You have to know your edge in this market. That's why you can't really see those taking signals to really go far in these markets because they are trading based on another person's edge in these markets. And in these markets, you have to trade based on your own edge, based on what works for you. Okay, I said if a strategy is 80% to 20% winning to losing ratio, and then you bought a signal from someone now, and then the person is on his losing ratio. You understand what I'm saying? Even though the losing ratio is just what 20%. Now the person knows that his losing ratio is what 20%. So even if he's losing at that point, is to him is not taking losses. But you that you've bought the signals, you are saying, oh no, this person is a loser. Oh no, this person has blown my accounts. But meanwhile, while the person is sending the signals and trading on his account, he knows that he still has the right to lose 20 times in a row. You understand what I'm saying? But you that bought the signal, you are not trading based on your edge. You are trading based on his edge, whereas his edge is working against you. You understand what I'm saying? I just believe someone is understanding what I'm saying because right now, I'm just trying to explain based on experience here. You can't trade based on another person's edge in this market. Now, when the person is trading his edge, which is going to be was the 80% win ratio, and then you are taking the signal, you're like, wow, this person is good, this and that, he knows how to trade. But once it's time for losses, and then it is he's on his losing edge, he's on his losing ratio now, which is the 20%. It's still fine, but you've risked and over leveraged because you know that this guy has been sending signals for the past 10 days and the signals are good. But he knows that okay, he's still risking the normal 1% is risking, he's still risking the normal 0.5% or whatever percentage he's risking on his account. But you receiving the signals, you're like, wow, I'm overconfident in this person, he knows how to send signal, and then the next signal he's going to send, you are going to use two lot size, and by the time he uses two lot size, that might be when it's going to be what is going to be on his losing streak of another 20 losses on a row. And then you start what? You start losing, you start losing, you start losing. Whereas those the person sending signal knows that his losses are normal. That's what I'm trying to point out now. To him, his losses are normal, but to you, the losses are what? They are abnormal. So that's why those taking signals will really not go far. And that is why I don't like giving free signals. So those that always ask, hey, give me free signals, give me this, give me that. I don't do that. Now, the only signal I give is on what is in my mentorship group. Why do I give signals in my mentorship group? To what? To assist members. Because I know I'm trading based on a plan. I know my students know that no strategy is 100% and then there are losses and there are wins. Whenever I take a losses, we are fine. Whenever I take a win, we are fine. Though we know we are not losers. You understand what I'm saying? You understand what I'm saying right now? So even when I send a signal in the group, before I send the signal, I send the analysis and the reason I want to send a signal before I send the signal, which is the analysis, the setup of the chart itself, something like this, and then I write some words, that which is the analysis, the reason for taking the trades. And then if the trade goes against us, then we know that yes, this trade has the right to go against us because the strategy is what 80% accurate. And then we believe that okay, it fell under the 20% accuracy. Understand what I'm saying? So let's move back to the websites. Okay. Yeah. For the start of the month, the pass rate was high due to violation system. Let's just ignore that because I know you understand that. Over 60% of traders in our data, this is it. Yeah, they posted it even on their Instagram. When I saw this, I was just like, wow, 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 wow. This is bad. Very, very bad. So why should you be trading an FTMO funded account that can set you up for life and then not use a stop loss? I've explained this. So the traders who have made it to their fourth pay cycle all have a risk management strategy. Exactly. of below 3 risk on any given day, which means they don't overtrade. This is the meaning of this word here, of this statement or sentence here. It means they don't overtrade. 3% risk on any day. It means each day they risk 3%, and those are the traders that have made it to their fourth pay cycle. They have a risk management strategy. I believe you guys have watched this video on my YouTube channel. Where is it? Risk management, the greatest strategy. This is it. Study session 10. Risk management is the greatest strategy. I want everybody to go back to that video and watch it, please. It's very, very important. The profitable traders are in the market less than 4 hours a day. You can see now they are not over trading. It's still under this. They are not always on the charts all day. They are just like, okay, once they've done their analysis and they know what they are looking for in the market, this is what I do. I analyze on all my pairs. I just do like this, okay, because I've already know the structure on the daily time frame already. So I just come down to the 1 hour to look for what my other blocks or demand zones, you can call it anyone, and then I wait for them to what. I don't even use what's it called, alerts. I don't need it, because I just sometimes I'll just come to the market maybe every 2 hours, because this is day trading, so I just come to the market every 2 hours. Let's check Euro USD. Okay, beautiful. I just set my analysis. I do all my analysis down, and then I'll wait for them to play out. I'll wait for every one of them to play out. Yes, this one I took this trade when I was making a video, and then it's played out very, very perfectly nice. You don't have to stay every day, all night on chat. No, you don't need it. Okay, this is 0.30. Beautiful play out here. Then now it's coming down again. And then on my crypto trades also, even though this one looks actually plenty, but still I still try to analyze very fast on them, because I'm used to it, so I just know what I'm looking for already, and then boom, I'm in and out. I don't stay all day looking at the charts, looking. Hey, because when you're all day looking at the charts, the up move and down move starts what's affecting you. You're like, hey, it's moving up, it's moving down. Should I enter a buy? Should I enter a sell? Should I do this? Should I do that? No, you don't need all those. You don't need that at all. Let me delete that, because I'm not interested in taking any trade today again. Take a look at this setup now. Look at this beautiful setup. I wanted to take a buy here, which was yesterday, but market didn't get to my zone. Fine, I'm not taking the trade. As simple as ABC. I'll look for another trade here, and I already know why this market didn't trigger my order block, because we still have a larger demand zone here that was formed before the break of structure, and then I believe market should mitigate the 50% of that zone. So let's mark out the 50% with the Fibonacci. Yes, that is the 50%. Now we can delete our Fibonacci, and let's see. You can see, so I believe market mitigated the 50% of that zone, and then I'm not blaming myself if my other blocks work or not. So this knowledge is this type of knowledge you get in my mentorship group, where you understand using all the old 50 using the old demand zone that was formed before the break of structure. So this is the disadvantage of refining. You can see we have refined, but we're not here for that right now. The knowledge is not on this free YouTube. Okay, now I miss this entry. I'm like, okay, fine, I'm not jumping into entry that, hey, market is going up. I have left it, and then I'm looking out to the next other block that broke structure. At least I know it's somewhere here. That's what I'm waiting for now. I'm waiting for a nice mitigation, and then if it doesn't mitigate, I'll check the 50% rule with Fibonacci, and then I'll see, okay, this is why my orders didn't mitigate. Very beautiful. And then remember, we're still using our entry principle also. You can see all my orders are already set. Everything is set. If you understand losses, if you understand that losses are minimal, then they will mean nothing to you. Not taking a loss and then you want to revenge, like, oh no, I must make my losses back, I must do this, I must do that. No, you don't need it. It's not necessary. You can see beautiful SFP. So I have all my pairs. Look at this one. Even though it sold beautifully well, I didn't take this trade because it has gone out of my order block zone. That's discipline. I didn't take this trade at all, because once it has gotten out of my what am I saying? Once it has broken my order block zone, then I don't want it again. I don't want it again. Even if it should sell, I will look for another sell entry. If you understand that these markets always give you limitless and endless setups, then you will not chase trades. You will never chase trades. Okay, I believe we are clear. And to me, this crypto market is still very, very bearish. Yeah, I was trying to take a sell here, but markets didn't give me confirmation. You can see this is the entry we are talking about in the mentorship group. No confirmation there at all. That's the double demand and supply zone. No confirmation, no entry. So I'm not wasting. You can see now all these analysis I've done. I've not used 30 minutes. I've not used 30 minutes. No confirmation, no entry. I've not used 30 minutes at all. At all. So this is what we're talking about. The most profitable traders don't what they didn't even spend up to 4 hours in a day. So why should you always be on the chart, on the chart, on the chart, on the chart? And they do not hold trades overnight. Yes, overnight trading is very, very dangerous because of the spread. I believe everybody is a victim of that. The spread, then whenever they are changing price and refreshing their system, spreads become wide. It just be within an hour. So many things happen. They take out stop losses, take out buy stops and sell stops. A trader who holds trade over the weekend has exactly even it's still almost the same thing as holding trades overnight and holding trade over the weekend, having chance of failing or losing their account. When the market is more volatile, more traders fail because of lack of risk. Yes, this is when there is news. Everybody wants to trade news. Hey, news! I must catch the news. I must do this. I must do that. But you should know that when you are trading news, it is more dangerous because there's issue of spread and there might be slippage. Whereas your stop loss might not close immediately, it is your stop loss, and then you're an extra loss. And then you still want to trade the news, you still want to trade the news. Hey, I want to trade the news, I want to trade the news, you want to catch the news. It's not by force. If you don't know the direction of the news, then fine. Even in my mentorship, sometimes if I want to give signal on news and then I'm not seeing anything clear, I won't send a signal on fundamentals because we trade fundamentals too. If the signal is not clear, I won't send a signal. It's not by force to trade the news. If volatility is prolonged, there is a bloodbath exactly. There are 5 traders who are on their 8th payouts on their live accounts. Imagine 5 traders who are on their 8th payout. These are the set of disciplined traders we're talking about on their 8th payout. So all of them trade conservatively, yes, and they make sure they get paid. Exactly. It means whenever they make profits, they withdraw. That's the meaning of what this is saying. None of them risk more than 2% per trading day. Yes, that's per day, and they stop whenever they reach 8% in margin. All traders who receive payout record have lost their accounts within 3 weeks of record payouts due to excessive risk. Now, this is very, very important. Sometimes some people always say trading is boring. And to me, I won't say it's boring. I'll say it's boring because you are not yet consistent. Because you are still forcing trades. You are looking for trade. You are not waiting for market to give you setups. That's why you might say it's boring. Yeah, sometimes it might also be boring because you have to wait for some days. Yeah, it's fine. It's normal. Now, they said all those who receive payouts they lost their account. It means those that got paid, maybe somebody got paid today, and then within 3 weeks, the remaining funds in the accounts got blown due to excessive risk. So I might say this might be due to maybe overconfidence or because they've gotten paid out before and then they just start trading anyhow. It happens whenever maybe because you've taken a withdrawal and feel like okay, there's money in your account, there's money in your pocket, then you just enter the market, just take a buy, just take a sell. You've forgotten your trading plan, you've forgotten your trading management, you've forgotten your risk management strategy, and then just start taking trades anyhow. It's not meant to be like that. You have to stay focused to be consistent because forex is a marathon, not a sprint. It's a marathon. There are many, many, many fun facts. Okay, I think that is the end. And then, oh wow, after all, it is a marathon and not a sprint. I didn't even see this before. Wow, 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 wow. I swear to God, I didn't see this before before I said it. And I've not even read this before. I only knew about this. And I'm just coming to read all this right now. So it's not like I planned it or I made this up and I just decided that oh, let me just talk about FTMO today. Let me talk about FTMO today because most of the messages I received are from FTMO traders, and this is the best way to achieve consistency. Take your time to learn, relearn, and unlearn everything you've learned, especially if you're in my mentorship. These videos will set you up. These videos, because there are now multiple entries for usage. I think there are five. Wyckoff. Now people always say Wyckoff is hard, Wyckoff is hard. I've simplified Wyckoff for you. But if you want to add Wyckoff, it's still on my YouTube channel. Yeah, for me in the mentorship channel. But this is Wyckoff simplified. The normal order block entry everybody uses. So this is nothing special. Then double demand. This I believe this one is special. Market maker candle entry. I believe this one is special. Multi-market entry. I was just explaining all this. I was talking about confluence on the entry, and then I'm still owing you guys one more entry, which is this confirmation special entry. You understand? So with all this, if a market or if a trade rather, let me say if a market, if a trade is going to move in your direction, you are going to catch it no matter what. No matter what. No matter what. Whatever pair, whatever time frame, volatility index. It works on volatility index like charm. It works on crypto like charm. It works on currency pairs like charm. As long as the you can see candlestick on your chart, it is gonna work. I believe I'm communicating. So literally all strategies work in these markets. It's left to you to find your edge. This is why some people always ask that if there's a lot of traders are now into trading, but never forget that 90% of traders lose 90% of their money in 90 days. And these days it's not even up to 90 days now, because most people just want to trade. Everybody wants to get funded, but not everybody wants to learn. Everybody just wants signals. And I just told you the disadvantage of signal, because you're trading based on another person's edge, not on your edge. And then once you are using another person's edge, there's no how. You can't achieve that consistency. It can't work. Some people select this as an order block, but me, I'll take this. I don't know why, but I prefer taking this than this. I prefer taking these two zones like that. Yes, that is how I want to use my own order blocks. That is what's my edge. And then once markets get into this place, now look for my entries. So beautiful. There's nothing to struggle about. It's not about forcing trades. Let it run. Just wait for the market to do its thing. And where is Lina? Is it Luna? No, it's Lina. Li. Yeah. Yeah. So no confirmation, no entry, and still rejecting. But to me, this market still was very, very bearish. Very much bearish. Okay. To me, still bearish until I get a breakout of this I. Where is BTC? It's still bearish to me until I get a breakout of this I. This is a what? Protected I. Because that's the most recent I. And we're expecting market to keep going below that I. To keep forming higher lows, higher low, below that I. So it is a protected I. Once market breaks it, we expect what? Buys. That's what I'm saying. So in this market, find your edge, be consistent. Your edge will lead you to consistency. Have a trading plan, have a set of rules you are trading, and you see how everything will go out perfectly fine. There's an entry here already. There was an entry here, but I didn't take it to sell. I was waiting for. Nobody can understand that entry here yet. Nobody can understand the entry there yet. Only my students who have watched the video, and I don't think I've even given them the video yet, but they'll get the video, so that's not an issue. Yes, at that point the markets, the candlestick at this point was not that didn't have a week. The 1 hour candlestick didn't have a week, and I know that market should always have a week, so I didn't take the trade because I was like, if the market should have a week, it might come and have a week on my stop loss and I keep moving down. So I was waiting for it to have a week, and then I really missed the entry. I don't really trade Bitcoin so it wasn't even doing me to enter this trade. You can see, but even though I didn't enter, it's playing out perfectly fine. So this is the ability to what? It's not every time. It's not every time you always trade. Yes, it's not every time you always enter trades, and over trading is very, very bad. 5 trades in a day is okay, because I don't understand why people should be taking trades over trading. And I've explained the issue of lot size, trade management, risk management in one of the videos, which is risk management, the greatest strategy. I want everyone to watch that video. This is study session 10, risk management. It's just 1 hour and 14 minutes video. I made it for my students, but I felt like no, everybody needs this, so I dropped it on the channel. You can see it's public. So I want everybody to watch it again. And those that I know in my mentorship that are still watching this video, this is just tip tip of the iceberg. That's 2017 views. Were very, very beautiful. So I think at this point I'll be saying, okay, we spent 45 minutes. Yes. At this point, I want to thank everybody once again for sharing the ebook. Keep sharing, keep sharing. Thank you so much. God bless you. And don't forget to subscribe to my YouTube channel. Turn on the notification bell to get more videos or to get notified whenever I drop a video. And like the video if you really liked it. Dislike it if you don't actually like it. It's part of life. And also comments. Let me know your thoughts. Let me know your thoughts. Should I make this type of videos talking about talking about trading, or should I make more videos on analysis? Just let me know. Just talk. Just drop something in the comment section. Let me know what's in your mind. Yeah, at this point, I'll say peace, guys. I'm out.